Hello, everyone. I want to spend a couple minutes with this spreadsheet and an example, podcast example of calculating your self-employment tax. In chapter 4, self-employment tax is introduced as a deduction for AGI because one half of your self-employment tax is deductible on the 1040 or on Schedule 1 as an adjustment to for the 1040 uh, adjustment to get AGI. So they don't spend a lot of time talking about how it's calculated. We'll spend some more time looking at self-employment earnings in general in a later chapter. But I want to at least give you the overview and examples of how to do that here in chapter 4. So if you only have self-employment earnings, meaning your only income is from a business, whether that be that you operate and you don't have, where you work for yourself and not for someone else, you're not getting wages, you're not getting paid salary or an hourly wage, but rather you're reporting the income from your business on your return. If that's the case, you take your earnings on the business, you multiply by, and this is the step that happens each time on any calculation of self-employment tax, 0.9235. All right, that's your first step. So this is your earnings on the business. This is your 0.9235, which is net self-employment earnings. Then you calculate when you're under the threshold, it's a one step or one part process. You take that calculation, you multiply it by 0.153 or 15.3%, and you get your self-employment tax. And so your half that would be deductible on, you put on the Schedule 1 and onto the 1040 as an adjustment to AGI is half of that, or in this case, $3,886. Now, and change the amount a little bit, go up to $165,000. We still just have one source of income, our business. First step is always to take the 92.9235. Okay, so why is it that number? For those who wonder, if you look at 0.153, that's the tax rate on self-employment. You 15.3, you take half of that and it's 7.65. And if you think real closely about it, it's 100% minus 0.765. So that's how you get 0.9235. So, but if you're over a threshold, in this case, when you after you multiply, you're over the 132,900, and that threshold changes every year. Then you have to do your self-employment tax in two parts: the Medicare part and the Social Security part, because the limit only applies to the Social Security part. So you go ahead and take the whole amount and you multiply it by the Medicare part. So that's 0.029 or 2.9%. And then you take the threshold, because we're over the threshold, we only have to pay up to the threshold, 132,900 times 0.124 or 12.4%. Notice that those two together are 15.3% or 0.153. That's all the self-employment tax. But when you're over the threshold, you got to split it in its two pieces. You multiply that by the only up to the 132.9. Any more over that is ignored. Okay. Add those two together, you get 20,899. Take half of that. That's what would be deductible on your for AGI on the Schedule 1. Let's say that another example, this first individual, and notice this none of the other things apply to calculating self-employment tax, whether you're married, filing jointly, or single, or any of those statuses. It's the same rate and the same threshold for everyone. and it is by individual. So even if you file jointly, it's not one threshold of 132.9. Each individual's earnings is subject to the threshold. That's why it doesn't matter what your status is. So salary, we have a job and we are self-employed. So we have a business on the side, we have our salary. So salary, we need to know that. We'll see a little later. Okay, self-employment is 90,000. First step, always multiply by 0.9235. All right. Now, if these two are over the threshold together, okay, then we have to break it into two parts. If we had been under the threshold together, then we could have done it, just taken this and multiplied it out like this. But in this case, we have to separate it into two parts. We take the whole amount and we multiply it by the Medicare part, and we take the threshold minus the salary, all right, and that is what we multiply by 0.124. So not the whole thing, just the amount that we outside of our salary. So the idea is our employer took care of paying our self-employment or Social Security tax on our salary. We only have to worry about the amount that we earned from our business up to the threshold. Multiply it by 1.124. Okay, add those two together, you get your total self-employment tax. Half of that, or 50%, becomes a deduction for AGI on Schedule 1 and then on to the 1040.